Hello everybody and welcome to another exclusive video, this time about Delcath, which is a company that may have a small cancer breakthrough on its hand. Delcath is the first and only FDA-approved whole liver directed therapy. It's a new way to channel chemo on a liver in a situation where other things are not available, like surgical removal of the tumor, for example. The product is highly technical. I am not an oncologist, but I know how to analyze stocks. At least I like to think. And when I see a good one, I think this one could be a good one because the valuation is cheap, the product is just getting started, and the margins are absolutely excellent, and you have optionality in where you could take this Delcath therapy across other types of tumors and other types of cancers. In fact, so right now, this is mostly a rare cancer, and it's for a rare number of patients, which is why you can see they can charge a lot for that product. But there's about 800 patients in the US that are potentially eligible for this treatment. It's very small right now, but they hope to expand this product, this type of treatment, to all sorts of liver-dominant cancers, and that means that the opportunity could actually be about 20 times bigger if they are successful in getting all of these other indications, all of these other melanomas covered via the FDA. And of course, you have to get these FDA-approved drugs. You have to get them FDA-approved, and the approval is typically very, very narrow for a very narrow indication. Most of the value of a company right now stems from their FDA-approved drug of Espado. It's a kit, it's an injection, it's a filtration system which allows you to, again, have more targeted, more isolated delivery of chemo, melphalan, which is like a more traditional chemo, a more targeted delivery in order to have a more effective treatment of the cancer. But there is significant upside among treating these 800 patients in MUM. There's significant upside. The platform, the HDS platform, which is this machine right here, the platform can be expanded across multiple types of cancer. It has been shown to have quite a bit of efficacy, and it's a different asset in oncology. It's not immunotherapy, it's not radiotherapy, it's a channeling device. It's a targeted device. And so, anyways, the commercial opportunity is very large right now, just with that drug at 600 million potentially a year if they addressed all 800 patients. How could 800 patients be 600 million? Well, let's find out. It's because of the cost of the treatment. The cost of the treatment is $768,000. Do that times potentially 800 patients a year, and you get a potential addressable market of 600 million in revenue. Keep in mind, this company is much smaller than that in size. Let's talk about briefly the competition. They have a competitor. The competitor is called Kimtrack, and the competitor does about 4 times the level of sales that Delcath does right now, about 4 times. But it's important to note that the addressable market of the competitor is only 45% of the MUM patients. The total addressable market of Kimtrack is only 400 patients. Delcath's addressable market is 800 patients because they are applicable to a different genotype. They don't have the genotype restriction that the one drug has. That's often what you see in healthcare when you have a next-gen treatment, a next-gen drug. They have expanded application. So this one can apply to the whole population, while Kimtrack only applies to about half of that population. And of course, as is always the case with these newer treatments, you price them a little under the competition, right? It's priced, $70,000 less than the competition. Anyway, the margins, as you can possibly guess, are going to be excellent when it's a 4-dose treatment, and the dose costs $187,000, $768,000 for this treatment. The margins are going to be absolutely excellent, and this is where we get to it. We get to the margins. Margin is 86%. Interesting to note that margin has shot up compared to 3 months ago when that margin was 40%. So this is a business, I think, that over the medium term is going to have a 90+% gross margin. Same story for the EBITDA. If you were looking at the past 3 quarters, the EBITDA was slightly negative, but now that they've ramped up the product, the EBITDA margin is 36%. So that should also go on the upside. They actually have profits too now because of that, pretty darn insane cash flow. And when I look at the potential growth, you can see that they estimate that their addressable market, if they get some of these phase 3 drugs approved for other types of melanomas, the addressable market could be, in the near term, over $1 billion in sales per year. In the midterm, keep in mind, this is a company right now that only has $54 million in sales. The growth has been consistent. Quarter over quarter, we did plus 40% 3 quarters ago, plus 39% 2 quarters ago, plus 31% this past quarter, with an actual operating cash flow, EBITDA being the proxy for cash flow, of $7.6 million. Net income, they're paying taxes, net income of $1.1 million, and they're sitting on $58 million of cash, and that is increasing, hoping to see them invest that cash in these other stage trials, in recruiting the patients soon enough to the stage trials so that you can actually expand the total addressable market and actually grow your sales. On this channel, as you know, I look at a lot of stocks, but I don't cover them unless they're cheap. And this one is very cheap. There's a lot of innovative companies in cancer. But the key is finding the sweet spot of a very innovative company who's going to have that explosive growth, but also that innovative company that is cheap at the same time because it is not noticed by the market. And that's why I find a lot of alpha in the deep health space, because a lot of people don't bother to study these companies because they find them too complicated or it's not their field. But anyways, the point here, the valuation over enterprise value, over gross profit, over revenue growth, that valuation is 0.11. The rule of 40 is a 136. And I get to those numbers by using a lowball revenue growth of 100%. Keep in mind, the total addressable market right now is $600 million. They make $50 million in sales. So I'm only giving them a potential double. I'm telling you they're going to do $108 million next 4 quarters, right? At next 4 quarters, and they'll have earned $108 million. This is what I'm telling you. I'm bearish. The analysts are actually much more bullish. And so this really depends because it's so early. We don't know what the growth rate is going to be. But if you just assume 150%, and when I look at the nice number as it have it at 154% next 12 months is what the analysts compute. Anyways, the number that I get is 0.07. Rule of 40 of 186. Both stock cheaper than channel darling HIMSS. If I take 150% here, we are getting to a stock that is, as cheap as a LifeMD, as cheap as a CorMedix, for a company that again is a product that is absolutely needed. If you have cancer, you're gonna get the treatment, and because this is for a rare disease, it has a special qualification which allows them to get those outsized payments for the drug, and they can finance new drugs. So I find this company very much. I am looking to add it to the portfolio. I also like that it hasn't run that much at plus 100% over 52 weeks. When a stock runs 100%, doubles essentially over 52 weeks, but yet you see revenue absolutely explode. When you see revenue growth much higher than 100%, it's okay in my book. It's okay in my view for a stock to grow up 100%. I don't think that stock got more expensive, especially now that there's a lot of de-risking because you have positive free cash flow in the form of adjusted EBITDA. You have high net income of $1.1 million. You have cash on the balance sheet, and you have a lot of optionality baked in if they get those other types of cancer treatments approved. Look, the total addressable market over 40,000 patients. Right now, only 800 patients. So quite amazing. I like this stock very much. This was not investment advice, not financial advice, only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.